We have Anthem Biosciences, which will be launching their 3,395 crore IPO on the 14th of July. The IPO is an offer for sale, so there will be no proceeds to the company, with the price band set between 540 to 570 rupees per share. To talk more about the IPO, we have the chairman and the MD and the CEO of the company, Ajay Bhardwaj, and the CFO, Mr. Baig, joining in. Mr. Bhardwaj as well as Mr. Baig, thank you very much for joining in. Well, Ajay, I'm going to kick off the conversation with you because you're a CRDMO company which is hitting the markets. And the big opportunity is possibly China plus one when it comes to the entire space. I wanted to start by asking you how tangible an opportunity is China plus one for you, and how is it playing out in terms of your P&L?
Good afternoon, everybody. People have been talking about China plus one for some time now, but in the last 6 months or so, we've actually seen a lot of traction. The number of inquiries that we are getting from our potential customers have increased quite significantly. So we do feel that we are at an inflection point where we can see a lot of demand come from customers. Nobody's leaving China in a hurry. But are they willing to put in their next project there? Is a new company thinking of going there directly? That anxiety is actually driving them to come to tried and tested partners like Anthem Biosciences. So we've been in the business 19 years, and we've established a very strong credibility with our customers, which is allowing us to be the partner of the go-to choice, partner of choice for drug development. And that's, I think, where Anthem is really going to benefit.
Okay.
You also asked us about the impact it goes on our P&L. So as you know that we are a CRDMO company, so we do work on entire discovery, development and manufacturing. So we have been proactively investing in our manufacturing facilities. We are expanding in our facilities in Unit 3 and also starting work on Unit 4. That helps us in terms of catering to the demand which comes in on account of this China plus one as well.
Okay, so my follow-up question is that you've done very well in your FY25 numbers. Your revenue growth is around 30% on a CAGR basis. You've actually beaten the other your peers who you are compared with. How much of that is actually the China plus one opportunity playing out? Mr. Bhardwaj.
Well, it hasn't. It hasn't played out as yet fully, but definitely what is actually playing out at this time for Anthem is that the projects that we've been working on for 10 to 15 years with very sticky customers, many of them have gone commercial. You see, we have 10 large commercial molecules where we supply either the active ingredient or the advanced intermediates to global innovators. 4 of these are billion-dollar drugs. This has played out a good part in our growth till now. But going forward, we are seeing, as I said, the drug development is actually a long cycle. The gestation period is long. So if we start a project today, maybe it will see the light of the day 7 or 8 or 9 years later as a commercial product. So that is where we are seeing the China plus one strategy playing out more at this point. Secondly, people are also looking at, if they are manufacturing in China, to de-risk or to risk mitigate their situation, they have approached us and said, can we help them in developing the product for them? Those revenues will kick in the future, in the near future, some of them actually.
Right. Gawir, I had to ask you this question because you're talking about the opportunity from China coming back, and as the management, you have been speaking about newer clients coming to you as well. If you could give us a sense over the last 3 to 5 years, what are the large clients that you have gotten? How long are these contracts? And, what is the US FDA status of your plants? Because for you to be China plus one, you have to supply to all these markets, etc., right?
Yeah. Thanks for asking this question. See, if you look at the top 10 clients of ours, because we do work on the entire CRDMO space, and these are all sticky relationships that we have. The average length of relationship with our top 10 clients is 12 years. Which means we have worked with them right from the very early stage discovery supplying them samples for their development batches, and eventually once the product goes commercial, we continue to supply to them. So it's a very sticky relationship that we have. And to cater to the needs of these customers, we have also scaled up our facility. We have an exemplary track record when it comes to compliance. We have gone through US FDA audit 6 times, 4 times in our first flagship unit, which we set up, Unit 1. All of them have been cleared successfully without any 483s or without any observations. The second unit that we set up, that has also gone through our US FDA audit twice. The last one was as recent as March 2024, successfully cleared without any 483s or observations. So we have an exemplary track record, which gives the confidence to our customers who are trusting their crown jewels from a development or a discovery to us in order to be able to help them out in this entire drug discovery cycle.
Right. Ajay, while we're talking about opportunity about China as well, what I want to also know your dependency in terms of China when it comes to your supply chain as well. And also, if you could highlight in terms of opportunity that is there in GLP-1 drug as well.
So, see, this is a very important part of the whole chain. A lot of the Indian pharmaceutical business is still dependent on China in terms of input. So, I mean, in spite of the best efforts in the last few years to move away from that supply chain, even today, 60 to 70% of inputs are coming from China. At Anthem, that number is 20% or below. We have worked very hard in the last 15 years to move away from this dependency on Chinese supply chain. So we have developed vendors, we have developed actually partners all over India as well as around the globe so that we can de-risk this part of it. So that is something that gives our clients a lot of comfort, because when they are trying to move away, the first thing they want to know is, okay, is your supply chain dependent on China? And we compared to any of our peers can say this very emphatically that no. Secondly, the peptide opportunity that everybody is talking about, GLP-1, as definitely some of those products are going to go generic in the next few years. But where Anthem is actually doing a lot of work is we have 10 new peptide projects. Now, the next generation of drugs in obesity, in metabolism, could be the ones that will change the game even further. And that's where Anthem is actually working with innovators to develop the next generation of drugs. You see, we have built our business you see, the disease burden over the last few years has changed as urbanization and lifestyles have changed. Instead of infection, now the diseases are more in metabolism, cardio, neuro disorders. And we are working with clients to develop the next generation of life-critical drugs. And that is where differentiates us from the other pharma industry in the country.
All right. So that's so specifically, Ajay, if you could just tell us if you are participating in any kind of GLP-1 opportunity.
So, yeah, we are supporting development of some of these products. See, again, in GLP-1, there is, in some products, the products are actually biosynthetic. There is a biology fragment followed by synthesis. Now, very few people in the country have the capacity to do fermentation at the scale. Anthem has developed that from inception. So yes, if when we develop a GLP-1 analog or a GLP-1 product, we will be able to do both fermentation as well as synthesis. Many of the companies who are doing this in the country are still dependent on China for importing the fermentation fragment. So again, it doesn't really move you away from the supply chain.
All right.
Chinese supply chain.
The other segment which I wanted to talk about was your small and emerging biotech segment. I think it's around 20% of your sales. There's a big crunch in terms of US biotech funding which is taking place, and it's been there for a couple of quarters now, and a lot of the companies have been impacted because of that. Any sort of impact on Anthem because of the US biotech crunch?
Gawir, you want to take it?
See, you need to understand a little bit more about our business model. We do discovery, but most of our discovery work which we do is late stage discovery or early development. That's where the product is identified. We are working towards synthesizing the molecule on a lab scale level, or you're looking at process optimization. So the molecule, the target has been identified, and we work on significant amount of programs in that space. And we have given those numbers in the RHP, which quantifies that we work on much diverse level and close to about 150 programs which are in across levels of development. And all of this has come from the emerging biotech clientele. Because these programs are slightly more advanced, so we are not subject to the vagaries of the biotech ecosystem. Unless the US biotech crunch lasts for a very long time, then and there is a significant funding freeze, then there could be some element of impact. But because the development cycle for our programs have been slightly more advanced, so we would be slightly more insulated from the ecosystem, from the biotech funding.
If I may add to that. See, we have actually, as I said, we are at an inflection stage in our growth. We have 16 projects now which are in late stage or are ready to be filed. That actually gives us a tremendous opportunity going forward, because, as I said, we have 10 commercial molecules at the moment, but 16 are at late stage of development. So this will be potentially the growth engine for Anthem in future.
All right, so let's wrap this up, Ajay, with some, a peep into what the future holds for you guys. You're saying that the best is ahead of the company right now, and there is more importance to this because a large part of the fundraise is, in fact, the entire fundraise is an offer for sale. So no money coming into the company. You have 600 crore plus of cash on your books, so funding is not a problem. But going forward, do you think this 30-32% sort of growth CAGR that you've been doing will sustain? And what levels do margins sustain at? Because they've been upwards of 45% at one point, now down to 36%. What levels do margins sustain at?
So we will be able to sustain our margins, but I'm pretty sure of that. Of course, I can't give any guidance on what the growth numbers will be, but we are very confident of the future because, as I was saying, this is the company is poised for. Everything is aligning. We're poised for a quantum jump in our growth. We have new facilities coming on stream. We have the new geopolitical situation, which gives us more traction with our customers. We have more projects, like, as I said, waiting to be commercialized. We have very sticky customers till now, and we have an exemplary track record of approvals from regulators. All these things are coming together at the right time for Anthem. So I do not see any challenge going forward in terms of growth as well as in terms of margins.
Okay, all right, Ajay as well as Mr. Baig, thank you very much for joining in and speaking with us. So that's Anthem Biosciences. The IPO opens on the 14th of July. Some more details. It'll be an interesting one considering that they have done margins of around 36% in FY25 and has probably been better than most of the other companies that they are compared to. We'll take a short break on that note, but we'll